In this video, we're going to look at Objective 2, prepare the cash flows from operating activities section of the statement of cash flows using the indirect method. There are two methods to prepare the statement of cash flows. In this course, you're going to use the indirect method, and it is the only method that you need to know for this course. Both methods end in the same ending number. It's just the way that you arrive at the operating section that is different. Most companies use the indirect method, so that is what we're going to use in this course. The direct method just directly lists out your operating activities. We are not going to use this method, so we're going to the next slide. But if you want, take a look at it because it's good to see the direct items that affect the operating section. This is more clear-cut to be able to see this, but because businesses don't have access to this direct information, we're going to prepare it the way that they normally do have the information. Direct method is great because it directly reports the cash receipts and directly reports the cash payments in the statement of cash flows. But it's usually more costly because we don't have access to that information. So it's not really used much in practice. So with the indirect method, we can easily find our net income or loss. So with the indirect method, we're going to start with that number, the net income or loss. And then we're going to back into our operating activities on the cash basis. So an advantage of the indirect method, which is the way we're going to be doing it, is that it reconciles the difference between net income and net cash flows from operations. And it is also less costly because we all have all the information available to us. And that's why we're going to be using this method. So as we mentioned before, both methods come down to the same number. See the same number for your net cash flow from operating activities? It's just how we get to this number that's different. This one directly stated it, and this one's going to start with net income and back into it. Okay, let's look at the cash flows from and used for investing activities section for a minute. When we say from, that is saying that we got cash. So that is an inflow. And used for means that we paid cash. And that is an outflow. So when we have cash flow from or use for investing activities, we're just going to list those. So if I have cash from an investing activity, that means I sold some kind of long-term asset. For example, if I sold equipment. I put LTA for a long-term asset. And then cash used for investing activities. So if we purchased one of these long-term assets, I would put it here, and then net cash flows from used for investing activities. So if our cash from investing activities was higher than the use, then we would call it net cash from, and it would be positive. if our negative was higher, if our cash from was higher, if our cash used for was higher, which means we used more than we got, then this would be negative, and it would say net cash used for investing activities. So which word we use right here is going to depend on if our net number is a net negative or a net positive. If it's a net positive, you're going to say net cash from. If it's a net negative, it's going to say net cash used for. Cash inflows from investing activities normally arise from selling fixed assets, investments, and intangible assets. You can remember this by saying selling long-term assets. Same thing with cash outflows include payment to purchase fixed assets, investments, and intangible assets. So you can remember this as purchasing long-term assets. Now we're going to look at financing activities. And these are, remember these words here, used and from. And remember, financing activities deal with your long-term liabilities and your stockholders' equity. So cash from financing activities would be your cash inflows from issuing bonds or issuing stock, or used would be cash used for redeeming bonds or paying dividends. And then it would net to a positive or a negative, and you would decide if it's from or used for, depending on if this is a positive or a negative. Anything else that did not affect cash would go under non-cash investing and financing activities. So let's say, for example, you issue stock, but instead of money, let's say you got equipment. Somebody gave you some equipment and you gave them some stock. This is a financing activity because you issued stock. However, you did not get cash. This is called a non-cash activity. This would go at the bottom of your statement as a non-cash investing and financing activity. So this is what this is going to look like. So we will look at this and see the examples as we go. But you've got your cash flow from operating, investing, and financing. And then when you net those three together, you get your net increase or decrease in cash. Then you add your beginning cash from the balance sheet. And then what you will get is your check figure to make sure that this amount agrees with the end of year cash balance on the balance sheet. And then at the very end, you have your non-cash investing and financing activities. You would list those out down here if you have those. You may not always have those, but if you do, they will go down here. So cash flow per share is a ratio that investors often compute. It's computed as net cash flows from operating activities divided by the number of common shares outstanding. It may be misleading because users may interpret cash flow per share as the per share amount available for dividends, and that's not true. Because this is just cash flow from operations. They also may misinterpret cash flow per share as earnings per share, but this is not the same because this is just cash flows from operating activities. This is not net income. Okay, pause it here, work these, check your answers, and then we're going to keep going.